60 points higher now on the Nifty, up at that 19,800 perch.
We've come off from the day's high, so the Nifty slipped close to about 75 points from the top.
The markets, 18 points higher on the Nifty. We, of course, opened higher, and we've seen a fall from there as well.
I think we complain because the Nifty is quiet, but I think this qualifies as a good session because you look at the Bank Nifty, you look at the kind of stocks which are going up. It is a combination of Reliance Industries, ITC and Bajaj Finance. I mean, those three names in the last about 40 minutes. The rally started about 240 or so, and it never stopped. We're up 90 points on the Nifty.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in just 5 headlines. I'm Ekta Batra. Here are the top stories for the evening. The Sensex and the Nifty end at a record high. The bank stock lead the charge. Mid-caps outperform the blue chips with the index gaining nearly 250 points. NTPC gains after Goldman Sachs initiates coverage with the buy rating, says the company will emerge as a winner in renewable energy transition with low-cost debt providing a strong moat. Goldman Sachs likes SJVN on the back of its exponential renewable energy growth targets backed by low-cost debt. Polycab surges after it posts its best quarter with growth of 50% in cables and wires. Other cable players like Havells, KEI, Finilex surge ahead of numbers. Tata Sons too invests over $5 billion in EV battery plant in UK. Tata Motors soars. Newgen Software gains on strong growth. Titagarh Rail Systems jumps on a bullish brokerage outlook. Bikaji Food hits a 52-week high after acquiring stake in Bhujia Lalji. Crude oil prices inch higher after China's top economic planner pledges that it would roll out policies to restore and expand consumption. Well, those are the top stories. Let's also tell you what we have lined up in the next 30 minutes for you. It's a packed show as always. In Market Opinion, we have Gautam Trivedi, co-founder and managing partner at Nepean Capital. In Big Corporate Voices, we have Polycab's executive director and chief financial officer joining in and talking to us, and the chairman and managing director. We also have the Chief Financial Officer of Bikaji Foods, Rishabh Narendra Jain, who will be joining in. All right, let's start with the market action. The Sensex gained over 300 points to cross the 67,000 mark. The Nifty gained over 80 points to inch closer towards the 20,000 levels. Bank stocks saw some healthy gains with the index gaining over 250 points. Mid-caps managed to outperform the blue chips, ending with gains of nearly 1%. Prashant Nair is here with a wrap.
Well, it was a good session for the bulk of the day, which only got better in the last 40 minutes of trade. Let me explain. I mean, the Nifty was quiet for most of the day after making a high early on, whereas the rest of the market was bubbly. It was doing well. What happened there is that starting about 2:40 in the afternoon, the Nifty also picked up steam. 3 stocks contributing to the surge that we saw, and the changes on the Nifty are on your screen: Reliance, ITC and Bajaj Finance. Well, it took us to the high point of the day on the Nifty. Banks, of course, were doing well. They end in a pretty decent way. Mid-caps and small caps, again, incrementally in the last hour, there was not much. But after yesterday's 1% setback on the small cap index, things came right back. Gainers on the Nifty, I mentioned 3, but just to add to that list, NTPC, IndusInd Bank were some of the other names I already mentioned, RIL, Bajaj Finance, which did well. Now, in the broader space, there was one sector which did very well, and it's a sector we don't speak about too much: cables and wires. And the trigger was Polycab numbers, which came yesterday. Numbers were a super beat. Stock did well yesterday, did well today, but it lit a fire under other cable and wire companies as well. So on your screen, Havells, by the way, Havells reports tomorrow, KEI Industries, Finolex Cables, Birla Cable, Universal Cable, and so many more. Tejas Networks, Sterling and Wilson, SJVN were some of the other names which did well. Bikaji, Titagarh, Shakti Pumps, Saregama, Premier Explosives. I could go on. Long list of volume-led gains we had. On the losing side, ICICI Pru, numbers disappointed, stock sulked. We had Nuclear Software and RBL Bank, which saw some profit-taking as well. Back to you.
Okay, all right, Prashant. Thanks very much for that. Well, in Market Opinion then, Gautam Trivedi of Nepean Capital says that the Indian market and global markets are driven by liquidity. He's also bullish on the defense space.
You know, here's the thing. The Indian markets as well as the global markets have been driven primarily by an avalanche of liquidity. And in India's case specifically, it's more foreign-led, especially since the last 4 months. So if I look around the world, you're looking at the MSCI Emerging Market Index, which is up 9%, but the MSCI Developed Market is up double that, 18%. Nasdaq's up 43%. The CAC, the Nikkei, and the DAX are all at lifetime highs. The EMS companies is what we like, as I just mentioned. There's going to be huge potential there. Defense companies, finally, I think, are getting their space in the sun. Of course, a lot of those orders are going to public sector defense companies, but I think more of the private companies will also start to benefit.
Okay, well, on to the second headline now. Power stocks like NTPC and SJVN surged between 3 to 6% after Goldman Sachs put out a buy rating on the stocks, while Tata Power fell 1% on cautious call from the brokerage firm. Nimesh is here with the details. Nimesh, tell us, what is it that Goldman Sachs' outlook is on these three stocks?
As you rightly pointed out, all the power stocks are buzzing in territory, especially NTPC and SJVN on the back of that big Goldman report. It's a big 60-page report, well-detailed note on why this stock should do well. So, in terms of initiating coverages, they've initiated a buy on NTPC with a target price of 265, a potential 40% upside. On SJVN, they have a target price of 55 with a buy rating. But on the third stock, which is Tata Power, they have a sell rating and a target price of 190, close to 15% lower from the current market price. So that's on the three stocks. Now, coming to NTPC first, why they like this company? Essentially, Goldman believes that NTPC will emerge as a winner in the renewable energy transition on the back of structured advantage of low-cost debt, which will provide us a strong moat. Also, on the back that the rising, peak shortages will re-rate the legacy thermal power businesses. So that's the key reason they like NTPC. On SJVN, what they like is the fact that there is going to be an exponential renewable energy growth targets for SJVN backed by low-cost debt. Additionally, in the near term, the earnings will look very strong on the back of commissioning of the two large plants, which will add to the earnings as well going forward. So that's the key reason why. They also believe that the hydro and the pumped hydro projects can actually meaningfully add to the earnings going forward for SJVN, and hence they like SJVN as well. On Tata Power specifically, they have a sell rating on the stock because they believe that the medium-term earnings will look. There are a lot of headwinds for that company in terms of global coal prices falling, and also the RE monetization has already taken place as far as Tata Power is concerned. So a big note on the power sector, but largely they have two initiating buys, which is NTPC and SJVN.
Okay, all right, Nimesh, thanks very much for that. So definitely all of those stocks were buzzing. But the third headline now, Polycab rallied over 4% after reporting what was its Q1 numbers. The growth was led by the cables and wires segment. The company reported a big beat on all fronts. Net profit came in at over 400 crores versus an expectation of 270 crores. Revenue also came in much better and higher than street expectations at over 540 crores. Polycab has reported a margin of over 14% as compared to the estimate of 12.6%. Surbhi is here with the details.
Thanks so much for that. So, Polycab declared the results yesterday, and the management indicated today that they have seen a volume growth in the range of 50 to 60% and a value growth of 50% this quarter. On back of that, some brokerages have also upgraded the stocks. We have Jefferies, which said that Q1 was an all-round beat. They have a buy rating with a target price of 48.35. They are valuing the company at 33 times FY25 PE and expecting a 17% revenue compounded growth and a 26% of PAT growth in the next 3 financial years. They see that the target PE as a 20% premium due to the ramp up in the FMEG segment, and also they expect revival in the capex on the capex front, and also expect the housing theme to play out. Morgan Stanley has also upgraded it to overweight with a target price of 48.68. They expect their earnings estimate to be anywhere between 6 to 13% over the next 2 years, and they are valuing the company at 40 times FY25 PE. Now, on the back of these strong numbers, other wire companies like KEI, Finolex Cables are also buzzing in trade today. Now, the expectations are that cables and wires industry will see a volume growth of 15% on a year-on-year basis this quarter, and the volume growth will come on the back of healthy B2B demand. So, order book from the B2B segment is going to be strong, and also the real estate demand is picking up. Analysts estimate that KEI, the revenues will see a growth of around 12% with an EBITDA margin expansion of 50 to 70 basis points. And Finolex will see a revenue growth of nearly 10% with an EBITDA margin expansion of anywhere between 80 to 100 basis points.
This was the best ever first quarter performance of the company in its history. We did almost 3,900 crore rupees of top line. 90% of that comes from cable and wire, where the volume growth is ranging between 50% to 60%. We set a target of 20,000 crore rupees by fiscal 26. By fiscal 23, we had already achieved a top line of 14,000 crore rupees. So we should be able to get to 20,000 crore rupees certainly by FY26, or it's quite possible that we are able to do it sooner than FY26.
Export market, we will gain at least 2% more in this year. And we are building a capacity because export require huge quantities and big markets. So we are adding the capex and putting a new factory for that. And demand is good. We can in future at least be doing 17 to 18% continuously for export market. Market gain is around about 1.5%. More we are taking now. And we are basically looking for a best supply chain.
Okay, and staying with buzzing cable stocks, Havells surged over 2% on the back of a positive brokerage call from Motilal Oswal. The firm has reinitiated a buy rating on the stock. Surbhi is still with us with the details on this.
So Havells has been buzzing in trade for the last 2 days. So we had a brokerage upgrade by UBS yesterday, and today Motilal Oswal reinitiated coverage on that stock with a buy rating and a target price of 1580. Now they are expected to declare results tomorrow, and over there as well the revenue expectations are pretty strong, up about 7%. The EBITDA expectations is up 30%, margin expansion of nearly 200 basis points, also because they had a lower base, so that also will be factored in. The revenues in cables and wires segments are expected to be higher, but the Lloyd, which is the AC segment, is expected to be a little muted, so that will offset, and they might not see a revenue growth as strong as Polycab, but still strong to high single to low double-digit growth.
Okay, all right, Surbhi. Thanks very much for that. Time for a break now, but stay tuned. We'll be back with all of the other top stories. Welcome back. Well, you're still tuned into Markets Today on CNBC-TV18. Let's get through all of the other stories that we're tracking for you this evening. Well, on to the fourth headline today. Tata Motors surged over 1%. Tata Sons is planning to build a new EV battery plant in United Kingdom. The company has announced an investment of £4 billion and production at the Gigafactory is set to begin in 2026. Sonia is here with the details.
Well, as you rightly pointed out, this is a big investment coming in from the Tata Group. They will be investing £4 billion to set up a new electric vehicle battery plant in Somerset in England. And this is in order to supply EV batteries to Jaguar Land Rover apart from other customers in UK. Now, this new factory will have an output of 40 gigawatt hours, making it one of the largest factories to produce EV batteries in Europe. The production at the new Gigafactory will start in 2026, and this new factory is expected to create around 4,000 jobs in UK, and the plant will eventually meet half of UK's battery production needs by 2030. Now, the Tata Group, remember, is going big in terms of its electric vehicle plans over the next many years. The company has also said that their balance sheet is improving substantially. They have spoken about how in Q1 of this year, they will be free cash flow positive to the tune of £400 million for Jaguar Land Rover.
Okay, all right, Sonia, thanks very much for that. Well, moving on, Nugent Software gained close to 5% after reporting strong yearly growth in the first quarter. Net profit jumped over 57% on a yearly basis. Margins also increased from 10% in Q1 last year to over 12% this quarter. Reema's here with the key highlights.
Thanks so much for that. So Nugent Software's numbers are looking very, very good. The company has clocked in a 33% top-line growth on a year-on-year basis. Now, this is a product company which largely caters to the banking sector. It's not your typical services company, which is why we look at the numbers on a year-on-year basis and not on a quarter-on-quarter basis. Year-on-year, the growth rates for the company have been inching up, and this quarter it's at 33%. Year-on-year, margins too have expanded, and as a result of this, because of a top-line growth of 33%, some margin expansion, the profits for the company have gone up 57% on a year-on-year basis. Margins for the company typically drop in Q1, but then they expand through the course of the year. The stock has also been on a tear. It's practically double this year because the company has been relatively unaffected by the banking cycle, the crisis, because it gets about 60% of its revenues between India and the Middle East, and US revenue is also not that high, 25%, and in that they've not catered to the banks which have been affected. So stock has been doing well, and today particularly the street has rewarded the Q1 numbers.
Okay, all right, Reema, thanks very much for that. So that's on Nugent. But sticking with earnings, Bank of Maharashtra reported a stellar first quarter. The bank's net profit rose 95% year-on-year. Net interest income rose nearly 40% on a yearly basis. Asset quality improved marginally as well. Well, in some more stock-specific action, then Titagarh Rail Systems surged close to 10% on the back of a positive outlook from brokerage HSBC. The brokerage firm expects the company to generate 2.5 times the profit in FY23 to 26. Vivek Iyer is here with the details.
Well, that's right. So Titagarh Rail Systems is stock in focus. HSBC today has initiated a buy on the stock. They kept the target price at almost 730 rupees a share. What they're saying is that they're expecting the company's earnings per share to more than double over the next 3 years, with the company being able to generate high teens return on equity. Also, what they're saying is that India's plan to go ahead and put more freight as far as its rails are concerned actually provides a compelling opportunity as far as Titagarh is concerned. Remember, the company is a leading maker of freight wagons and also an emerging champion in the passenger coach business. So what HSBC is saying is that they're actually forecasting a 2.5 times jumps in profit over FY23 to FY26 with an average return on equity of almost 18% and a more diversified business model actually aiding Titagarh going forward as well.
All right, Vivek, thanks very much for that. Well, moving on to Federal Bank, it was in focus. IFC plans to invest over 950 crores in the bank through a preferential allotment. Abhishek Kothari is here with the details on this story.
Well, as you mentioned, IFC will invest about 959 crore into Federal Bank via preferential allotment. So IFC's holding in the bank will increase to 8.1% post this fund transfer, and it was earlier at 4.95%. So what the fund infusion will do for Federal Bank, as per calculation, Tier 1 ratio will increase to 14.36%. Currently, it's about 12.54%. Equity dilution is about 3.4%. 4%. Net worth will increase by 4.5%, and book value will increase by 1% to about 106, 107 per share. Federal Bank may also look to raise more money, more capital via QIP or other instruments as well. Back to you.
Okay. All right, Abhishek. So Federal Bank was in focus from the financial space. Bikaji Foods jumped, hitting a fresh 52-week high after it acquired 49% stake in new snack maker Bhujia Lalji for over 5 crores. The deal involved 9,600 equity shares and 396 compulsorily convertible debentures. The acquisition is a reflection of the rapidly expanding packaged snack market. Rishabh Narendra Jain, the CFO of Bikaji Foods, says this deal will help the company become a 100 crore brand in the next 4 years.
We, being one of the leaders in the industry, cannot. So we also require one brand who can be a price warrior, who can fight with other local brands. So this can play a good role in this. And of course, this business industry is very big. This can become a 100 crore brand in the next 4 years. Volume growth perspective, we are working on the same. See, volume growth will be 2018. That's the number which you are working on, right? Yeah, that's a number. But yeah, so on both things, be it top line, bottom line, we are working aggressively. Be it on focusing on utilizing capacity, be it on improving our sales and distribution strength, or setting up strong process. That's a process, the work we are doing across all levels.
Okay, well, moving on to the fifth headline today, onto the commodity space where global oil prices rose, boosted by hopes of higher demand. This is after China's top economic planner pledged that it would roll out policies to restore and expand consumption. Manisha Gupta is here with a wrap.
Well, the crude oil prices seem to be consolidating after nearly 2% gains in the overnight market. The support comes in ahead of the U.S. inventory data that releases today in the evening, and that could show you a decline in the U.S. inventories. The production from the shale gas in any case has been declining, and the markets anticipate a 9.4 million barrels per day of a production in the month of August. Add to that the fact that the Russia also is going to cut its output by nearly 2.1 million tons in the third quarter, and that also tells you that going forward in the third quarter itself, you could be looking at supplies really being sucked out. The demand in the meanwhile could be coming in from China. The imports from that country have been robust, and with China reiterating yet again saying that they are pledging support for consumer recovery, consumption recovery that is, and even expansion, could lead to some more support going forward into prices. You also are looking at the dollar index trading at near 15-month lows. That has been supportive. And with the kind of data that we have seen come in from Europe, even the global central bank statements, inflation easing as well, does tell you that there is support coming in sense of demand going forward when it comes to crude. We also have seen a huge jump up in the natural gas prices overnight, up by nearly 5%, as the air conditioning demand from US and Europe continues to be supportive. So energy clearly in a bit of a sweet spot as we look at it.
All right, Manisha, thanks very much for that. On that note, it's a wrap on markets today. Thanks very much for watching.